I am Charlie Stevenson, the founder of Akras Capital, and I'm here with our strategic advisory board member, Paul. And we're going to do a quick interview just so you all can get to know Paul and understand a little bit about why he is working with our team to ensure that we are guided well as we grow Akras and as we navigate the different market cycles. And Paul's a really interesting guy. He's got 30 years of experience as an analyst, a trader, as a portfolio manager, and as a C-suite executive for one of the most respected companies in the world and in the United States for sure, which was Safeco Insurance, which is now Liberty Mutual Insurance that many people know. Paul provides us with strategic guidance. He helps us keep a trained eye on the global and domestic market forces and ensures that we essentially are making the best investments at the right times in the market. We connect with them, on a as-needed basis, but certainly during our quarterly strategic meetings, and where he jumps in and just kind of supports us with anything related to economics and looking at the overall market, domestic and global. He was a former director of taxable fixed income for Seattle-based Safeco Insurance, and for over 2 decades, he oversaw daily management of various types of fixed income securities portfolios that ranged in assets under management from $2.5 billion to $20 billion and sometimes more. So he had some pretty heavy responsibilities in terms of managing assets. And he was an active participant in the risk, credit, and investment management committees within that organization, which is quite unique considering it was an insurance company. So on a lighter note, Paul's an avid outdoors enthusiast. He's an alpine mountaineer. He's got a long history of climbing peaks in the inland Northwest where he's originally from, but also, internationally over in Pakistan and the Himalaya. And that gives him an interesting level of wisdom that he brings into the world of investments. It's a unique type of understanding of risk. So anyway, Paul lives out in Sun Valley, and that's where he's joining with us today from. And while he's mostly retired, he still keeps pretty active in a variety of ways in the markets. And anyway, before I give everything away, I just want to say, hey, Paul, thank you so much for joining with us today. And of course, we love having you as one of our strategic advisory board members. Just glad to have you here, and I'll ask some questions.
Okay, great. Let's go.
All right. So in terms of your personal background, where are you currently living and what are you doing these days?
Well, I live in Sun Valley, which is in Idaho. It's the pretty much original destination ski resort in the United States, started in 1937. It's also an area where there's unlimited hiking. There's 3 major fly fishing rivers in the area. Of course, downhill skiing, cross-country skiing, mountain biking, the whole bit, a lot of trail running. So that all keeps me active, and I'm out there year-round, full-time. When I'm not outdoors, in the mornings anyways, until the market closes, every day I'm in there looking at the markets, and predominantly these days in the stock markets, partly just because even though my background is fixed income, there's not much yield to be found in bonds, and they're kind of boring at that point when they don't pay much, and there's a risk reward imbalance. It doesn't make sense. So mostly I'm into the equity markets and a little bit in the commercial real estate as well.
Gotcha. Okay. And where did you used to live before you moved to Sun Valley? And what did you like to do? What did you like to do in the past before you moved here?
Yeah, I grew up in Spokane, kind of a traditional family. And when I was younger, I played sports in school. And then at that point, I was a little bit older. I started in the rock climbing because I had a rock climbing area within Spokane. I also downhill skied a lot on my own. And then after I left Spokane, I went to college. And then from college, I went to the big city, so to speak, to get the job. And I went to Seattle, Washington, of which I hadn't left. I was there for many, many years. And I early on was climbing initially, and then I was able to work my way into Safeco in the investment operation. And it was such a good job. I liked the people. I liked my bosses. They gave me a lot of responsibility. There really wasn't any reason to leave because it was a great career path. And I ended up running the entire fixed income area, and I had a large team report up to me. But along the way, I kind of did everything from settling trades, eventually to helping analyze securities. Eventually, I was given a hat to trade, and then portfolio management responsibilities, and then over different types of classes of securities. and then eventually I was kind of the head of the operation.
Got it.
So,
Yeah.
and then here in Seattle, I kind of continue with much of the same.
Okay.
So,
And you
and
always
so
had and you always had your eyes sort of over on the Cascades, and further from a climbing perspective when you're out in Seattle as well, right? Can you tell us a little about your kind of climbing experience and career in that regard?
Sure. Yeah, I started in Spokane climbing. I met some people early on that were much better than me, and they kind of like mentored me. And then I started going to other areas, rock climbing areas. I also like the alpine climb, which uses all the different skill sets. It could be, from snow climbing, ice climbing, to rock climbing. Most of what you're doing is route finding, trying to figure out how to get up there and get down, be safe. It's nice to have an objective that you achieve. And then dealing with the weather in Seattle is considerably a big deal with all the rain and the
It rains,
weather.
right? Yeah.
So
Yeah.
all that kind of taught me a lot about you own your decisions and risk management, which lent itself extremely well in the investment field, because every day you come into work, the markets have changed, or there's something that you thought of would apply, and it changes all the time. So,
Right.
and they eventually recognized that in me, and I was sat on the risk committee for Safeco. But my background, I have a CFA, and that helped me sit on their credit committee, and then also helped them with their credit arm when they did real estate lending
Yeah.
as well. And that kind of introduced me to commercial real estate.
Got it. Paul, what's a CFA?
Certified financial analyst. They're the guys that write the stock reports that you might get from, the big Wall Street firms.
Got it. Okay, great. All right. So, you've had a big career in professional investment management at the institutional level. Now, personally, you are keeping an eye on the markets and investing in equities and also real estate assets in the commercial and residential space. So, certainly I know the answer to this question because we really benefit from your guidance and feedback on Akras' strategy. But, in your words, why are you well suited, to support our organization as a member of our strategic advisory board? What do you think about that?
Well, one thing, you pick up 30 years of experience, and along the way I made mistakes. And I
Yeah.
learned from those mistakes, and I learned not to do them again. And at the same time, I also have a very wide breadth of experience across different investment sectors. There's not a lot of people in the fixed income area who've had direct experience with real estate. So I was a little unusual in that way. I was involved way on early with the mortgage-backed securities market, and then also Safeco had a lending operation, and I would get involved with underwriting some of those loans to those individuals. And I just think that since subsequently I've been spending almost all my time in equity investing to further expand my knowledge base and lessons learned there as well.
Mm-hmm.
I tend to be a very cautious investor, and those are the kinds of things that I bring to the table with
Yeah.
you folks.
Yeah.
So
Yep. Great.
I listen to what you have to say, and most of what I hear I like, and occasionally I might raise my voice and have you thought of this and have you thought of that?
Yep. Yeah. Well, we definitely appreciate, that friendly fire that comes from you, and it definitely has us challenge different strategies and ideas that we have. So it's really appreciated. So I guess just thinking about the different people that are listening to this interview, we've got a variety of individuals that invest with us. Some are new investors, some are very veteran investors, and thinking more about the veteran investors, who are actively investing in the stock market and in real estate these days. What do you see as some of the biggest opportunities in our market, considering kind of where we are in early 2021, and also some of the biggest potential pitfalls that those veteran investors should be aware of?
The opportunity is a little bit harder to identify and come by right now, especially if you look at the equity markets. We're hitting all-time highs in the various sectors. The stocks are trading at huge multiples. Plus, there's a little bit of frenzy in the market. You've seen it; it's well known. People write the stories about it. They love to talk about it. So it's easy to kind of get caught up in that. I think at this point for the veteran investors, they're aware of that as well. And they're at times thinking, well, how do I navigate these waters when it looks like there's not a lot of opportunities. I think what I've identified with what you folks can do is the markets are in as less liquid, maybe not as, clearly not all the buyers, but there are certain sectors that also do draw a lot of attention and get overbid. And you folks have been careful to stay away from that. Look at sectors that you think, let's at markets that you're very positive about, sectors that you think would do particularly well. Let's say like multifamily. It doesn't get bid up as much. It's a more stable source of income. Maybe it doesn't draw as much attention as some of the other sectors. Like maybe someone's looking at brick and mortar and think, "Wow, look at the great deal there." There's a reason there's great deals there.
Right.
Some of those malls and such are at risk for a very good reason.
Right.
And while Amazon might be able to beat the heck out of certain of these malls, at the same time, still people need to have a great place to live, where they want to live, and where they want to work. And
Yeah.
you folks have been working on trying to find those deals, be patient, do good, clear underwriting, and that's where the opportunities arise.
Yeah.
I think at the same time, if not the veteran, but let's say the newer investors that are coming on board,
Yep.
the stock markets are kind of an interesting place to start because there's so much known about them. You can start with a little bit of money to put. You can maybe start with $1,000. And nowadays, it's not that hard to invest in with Wall Street. You don't need the stockbrokers. You're not paying large commissions.
Right.
There's a lot of channels and such and news out there to track. At the same time, it's very important that you start slow. You clearly have to understand what the heck you're investing in. Just don't take somebody else's word for it.
Yep.
Try to, may look like you're overdoing the work and the study, but it all pays off in the end.
Yeah.
I think that diversification is probably the most important thing that you can do with your investment portfolio over time.
Yeah.
Maybe you start in the equity markets and you get to a position, don't put all your eggs in one basket. Clearly, you hear that again and again, and it's true.
Yeah. Yeah.
And the same thing, whether it's real estate or, and whether it's stocks. I mean, it's pretty easy to say, I like this name, I like that name, and I like that name, and then realize every single investment you have is in the tech industry.
Sure.
And it might be, maybe it's security in the cloud. And next thing you know, you didn't know you'd put such an overweight in such a small sector.
Sure.
So that's an example.
Okay.
And listen to other people, that have more experience than you, could mentor you along. It's fun.
Yeah.
I love it. So, yeah.
Well, so what I heard was, be cautious, whether you're a veteran or a new investor, be cautious, conduct your due diligence, be patient because there's a lot of money following, a scarcity of deals, and make sure that you are investing in places where the fundamentals are sound, the markets and the names, if it's an equity, where the fundamentals of that particular business are very sound. And certainly for multifamily, that's, a market that has a lot of growth characteristics that are unencumbered by COVID and other kind of market forces that we see and hear about. Does that sound like a pretty much a summary of what you're doing?
I think, and a lot of people invest in, you can invest in the multifamily market. Either you're looking for, just a total return. You might also be looking just for income or some combo of the two.
Sure.
Right now, with interest rates so low, because the Fed has pushed rates low, and the 10-year is not that far from an all-time low, a lot of investors have left the fixed income or the bond markets because is 3% or 4% that attractive over a decade? No, that makes sense.
Right.
And so they're going elsewhere to try to find yield. And one of the places they can find yield is in real estate. The other is in dividend paying stocks.
Sure.
So I think that's put a little bit of extra, quite a bit of capital out of that sector into other sectors, but it'll swing back. And at some point, rates will start to climb a bit. That doesn't necessarily mean it's bad for real estate just because you have a climb in interest rates. It could be a reflection that inflation is coming back, and inflation can be friendly to commercial real estate when you hold the asset.
Sure.
It isn't.
Yeah.
And so, and if you'll start to see some of the frenzy fade,
Hmm.
hopefully, and
Yeah.
get back to normal markets and more comfortable markets.
Yeah.
But at the same time, I'm sure that you folks are not going to stop your underwriting, your thoroughness of where you want to invest, what you want to invest in, and how you're going to go about doing so.
Yeah.
That's part of what
Okay.
I'm here for.
Yeah, I appreciate it, Paul. Well, thank you for answering some of these questions and telling us a little bit about your background. And I hope you get outside and enjoy some of that, beautiful Sun Valley sunshine. And I'll speak to you really soon.
Okay.
Thanks, Paul.
Thank you, Joe.
See ya.
Okay, bye.